It's December 4th, JLD here, and welcome to MSTR Today and the Treasury Titans. Nothing in this video is financial advice, but Michael Saylor wants you to know, I want you to know that orange is beautiful. And by beautiful, I mean absolutely stunningly gorgeous. I mean beautiful with a capital Bitcoin B. I mean, actually, the brand colors for my business since 2012 has been orange. So I've always been a fan, but man, ever since I became the Bitcoin maxi, the strategy maxi that I am now, and have been now for a couple of years, orange to me is even more beautiful for all the obvious reasons. So we have a lot to talk about today, a pretty epic Michael Saylor talk that's coming up as well that I want to share a good chunk of with you because there's been a lot that's been going on. And Adrian jumps right in the fray by saying, PSA to MSTR investors. Have you ever thought about what it would cost to build another strategy? Let's use nice round numbers. At $100,000, 65 billion minimum. That's years of accumulation in market conditions that no longer exist. MNAV measures premium to holdings. The replication cost measures the moat. One will oscillate, the other is permanent. So what's permanent? The moat is permanent. The moat will never be breached. What will oscillate? The MNAV. It's a pendulum. It will swing due to market sentiment, due to market conditions, due to strategies, decisions in the future, a lot of which will be brilliant, some of which may not be brilliant. I mean, they're human beings after all. Only time will tell. I mean, there's a lot of things that we can look back and say, yeah, strategy could have done this earlier. They could have done that differently. But guess what? They are creating a new space. They are pioneers. They are leading the charge. And to me, they are doing an absolutely incredible job. And I had to just jump in here as well. Let's see. Oh, yeah, right here. I wrote, PSA to MSTR investors, you are going to be rich. Not financial advice. This actually got 1.3 thousand views, 21 hearts, and 2 comments. One from Adrian that says, that is definitely one way to frame it. Ha ha. So we're on the same page there, obviously. Chris Miller says, strategy is the Amazon of digital credit. The same way Amazon became the go-to platform for consumer products at scale is the same way that strategy will become the go-to platform for digital credit at scale. MSTR. It is going to happen. Strategy will become the go-to platform for digital credit at scale. Exciting times. Grain of Salt says, most people can't reason about perpetual capital. That's strategy, stretch, strike, strife, stride, stream. If a financing structure includes zero, this is no refinancing ever, or infinity/infinity, meaning no maturity, their entire mental model breaks. They don't model perpetuity. They can't even comprehend it. Strategy did something clever. They built a 21 to 36 month pref cash buffer, not because perpetual capital needs it, but because giving the market a term value helps analysts who can't process zero or infinity feel grounded. The cash buffer doesn't fix the math, which doesn't need fixing. It just helps legacy frameworks and people catch up. And Grain nailed it right here. And I want to just step back real quick and kind of put this in my own words, because this is how I think about it, is that does Michael Saylor want to take 1.4 billion, which is like over 1,000 Bitcoin? Does he want to take that much dollar of dirty fiat and just have it sitting on the sidelines? No, Michael Saylor doesn't, because Michael Saylor knows the math. He understands the math. He knows that 1.44 billion would be much better off if it was plugged into Bitcoin already right now, into the Bitcoin generator, earning a 30, 40, 50% annual CAGR. He just knows that. He knows that 100%. But guess what? Strategy, Michael Saylor, they are looking to get the preferreds rocking and rolling. Specifically, they want to get stretch to 100, because you saw what happened that week. And it was actually just like 3.5 days. The stretch was at 100. They did like 111 million or like $130 million in ATM. That is where Saylor wants to get, because nothing else matters. So if it takes us putting, and by us, I mean strategy, the shareholders of MSTR, like if it takes strategy to put 1.44 billion aside and just say, okay, you clueless analysts, you clueless traditional finance individuals, you clueless institutions. If you need us to have 24 months, and right now it's 21 months, but I think by Monday, this is my guess, by the way, I think he's going to bump it up to 24 months. So he'll probably have another little green dot on Sunday. We'll see, maybe not, but I think they're going to get it to 24 months pretty quickly. He's saying, Saylor saying, strategy saying, if you need to have around 24 months, around 2 years of cash coverage for these prefs, we will give it to you, because what really matters is that we get these prefs seasoned, is that we get specifically stretch back to 100 so that we can ATM its flipping face off. It's 10.75% right now return. That is insane. It's rock. It's return of capital. That means deferred taxes for 10 years. That is insane. That's like a 16 or 17% actual yield, actual return compared to its competitors. It's absolutely unbelievably amazing. And for people that are jumping on it, like myself, getting those juicy cash payments every single month that I'm then converting into MSTR, into Bitcoin, into other investments, it is a thing of absolute beauty. So I love what they're doing. I love the fact that they put this there and they're just saying, you know what? This is also for the rating agencies. This is also for the rating agencies that right now, and hopefully these rules will change as the Basel is updated, but right now, these rating agencies that gave strategy a B minus, what are they not doing? They are not counting Bitcoin as collateral. So now we got a B minus rating with zero collateral, literally. What are we going to get upgraded to with 2 years worth of coverage for these prefs? With 1.44 billion, and that number is probably going to go to $2 billion of coverage of these prefs. What do we get then? Maybe a B plus? Who knows? Like, who knows where it's going? Double B? I don't know. Who knows? But it's going to go up because it can't go down because it only got better. It only got more coverage. So that is the mic drop moment. Now the S&P and the other rating agencies, they can't let me take a step back there. They have to upgrade strategy when the time comes, because strategy has improved itself on the balance sheet and their faulty metrics. Even though their metrics are faulty, that's what they're going with now until that's updated to the correct way that actually counts Bitcoin as collateral. And so maybe in a couple of years, maybe more, maybe less, strategy can just be like, you know what? There's actually no more need for this cash collateral because everybody's caught up to our line of thinking, and they just dump it back into Bitcoin, and they can do that, and that'll be fine too. But until then, we need to get the credit rating up to open us up to more capital markets so that Stretch can ATM its face off. So the Stretch can do $100 million a week, $300 million a week, $500 million a week. Saylor wants to get it to $1 billion a week, and it can and it will get there. End of story. Let's keep moving on, because I hope you understood that rant session. Let me know in the comment section if you agree with it, if you disagree with some of that, if you want to add something to that, if you agree, anything. I would love to hear your comments in the comment section. Chris says, people who question either the price or timing of Saylor's Bitcoin purchases simply do not understand Saylor, do not understand strategy, and do not understand Bitcoin. So let me just say it one more time. People who question either the price or timing of Saylor's Bitcoin purchases simply do not understand Saylor, do not understand the strategy, and do not understand Bitcoin. There's people like, why does Saylor always buy the top? Wow. Why doesn't he just wait for a dip? Wow. That is what traders do. Strategy, Saylor, Fong, they are investors. They acquire the capital, they buy Bitcoin. That's what they do. I mean, let's just be simple here, guys. God, it's just so clear. MSTR, this is from Chris again. MSTR is a double IQ test. First, you have to take the time to understand Bitcoin. Second, you have to take the time to understand strategy. So few people understand Bitcoin. And the people that understand Bitcoin, so few of them have taken the time to understand strategy. And that's okay, because the people that understand Bitcoin, you are going to win. They are going to win at a massive level. I'm so happy for them. But those of us who have gone above and beyond and actually taken the time to also understand strategy, I mean, we're going to win at such an exponential level. It's going to be such a fun ride. I simply can't wait. Now, Michael Saylor dropped value bombs at the Binance conference yesterday. I've got it here queued up for you. You've got to listen to this. Sit back, relax, and enjoy. Michael Saylor just made an $835 million bet buying the Bitcoin dip. Right now, Bitcoin's fallen almost 40% off its October high, and the big money is buying the dip. What's your strategy? Now might be a great time to convert your IRA or 401k to Bitcoin with the help of Bit IRA. Plus, you can fund it with pre-tax funds, then continue to invest it over time as you do any other retirement accounts. Bit IRA protects your assets with end-to-end insurance, highly secure storage, multi-encryption, and registered with the US government. Your IRA is fully IRS compliant. Best of all, you can trade crypto within your retirement account without incurring taxes on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Bitcoin has proven time and time again to rebound, every cycle going from a higher low to a higher high. With Strategy's latest purchase, Michael Saylor clearly believes Bitcoin is at a discount. Time for you to get in too. Go to bitira.com/JLD to open a tax-sheltered IRA in Bitcoin. When you're ready to build your complete business identity, you want to do it fast and right. With Northwest Registered Agent, you can build your business identity in just 10 clicks in 10 minutes. When you want more, start your business with Northwest. Everything you need to launch and protect your business all in one place. Your business identity isn't just your logo or website, it's everything that represents you, from what customers see to what they don't: legal filings, state licenses, secure domains, and compliance tools. Northwest gives you more privacy, more tools, and more guidance so you can focus on growing your dream. For nearly 30 years, Northwest has helped entrepreneurs like us build confidently. You can form your business for just $39 plus state fees, backed by real corporate guides, people who know your state's laws and have your back every step of the way. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks in 10 minutes. Visit www.northwestregisteredagent.com/paidJLD and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/paidJLD.
Having me. I'm delighted. This is my first time at Binance Blockchain Week. Impressive, very excited. You know, I see a lot of yellow. I guess today's an orange and yellow day. Thank you for hosting the orange. I'd like to share what I see as probably the most exciting development of the past year, which is the worldwide embrace of digital capital, digital currency, digital finance, and digital credit. And Binance is a big part of it. Everybody in this room is a big part of it. And I'm going to share my perspective on it. And I thought I'd start just by observing. By the way, there's supposed to be a timer here. The timer's wrong. Could you? It says I have 12 hours and 40 minutes. Yeah, you guys are in trouble. I could actually fill the 12 hours and 40 minutes. Let's start with an observation. There's a revolution in the capital markets going on. And that revolution is impacting the capital markets for currency globally. It's impacting the capital markets for equity. It's impacting the capital markets for credit. It's impacting the derivatives capital markets. And the basis of a lot of this starts with Bitcoin, and it starts with the embrace of Bitcoin by the global financial community. So Bitcoin is emerging as digital capital. And why is it digital capital? Because the President of the United States, Donald Trump, has styled himself the Bitcoin president. He's declared he wants to make the United States the crypto capital of the world. He's decided he wants to lead in digital innovation, whether it's digital assets, digital capital, digital finance, or digital intelligence. And you can see that it's not just rhetoric, because he's appointed a cabinet, and that cabinet consists of an incredible array of digital advocates. The Vice President of the United States is an advocate. The Secretary of the Treasury, Scott Bessent, is an advocate. The head of the SEC, Paul Atkins, is an advocate. And not just the financial regulators, you also have non-financial regulators like Tulsi Gabbard, Kelly Loeffler, Robert F. Kennedy, even the head of the FBI or the head of Commerce. You've got an unprecedented support for this asset class across those people running the entire government of the United States. And this is a big deal. We've come a long way in 12 months. The second thing that's happening is that for Bitcoin to emerge as digital capital, you need the banking industry of the world and the banking establishment to embrace it. And they were fairly hostile to the entire crypto industry until about a year ago. And even a year ago, with the change in administration, there was uncertainty as to whether or not the banking regulators would actually make good on the campaign promises of the Trump campaign. And what we've seen is they have. There's been a series of announcements by Treasury, by the OCC, by the FDIC, by the Federal Reserve, and even joint bulletins from all those financial regulators. The sum total of them to say crypto is good, Bitcoin is good, it's okay to bank it, it's okay to lend against it, it's okay to custody it. We know that the previous administration punished banks that engaged in crypto activities. We're not like them. There's a 180-degree sea change. So banks are the most bureaucratic, risk-averse institutions in the world for good reason. You would think that from the point that the tone at the top changed 180 degrees, it might take a bit of time. I mean, for all the banks in the world to embrace crypto, to embrace Bitcoin in 4 to 8 years would be fast. What you see here is it's happening much faster. What we've seen is BNY Mellon, PNC Bank, Citibank, JP Morgan, Wells Fargo, Bank of America, Vanguard, all of these have flipped from a hostile, negative, or skeptical view to a positive view in the last 12 months.
What's the second best? There is no second best.